Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 219 on 28th of April. The predominant theme in the global markets is what is happening at NASDAQ. Technology stocks that had run up dramatically over the last 2 years have been falling like 9 pins. And NASDAQ seems to be now at a very, very crucial support level, and we'll talk about the chart on that post this. So another day of a bit of a indefinite or indecisive start, but then later on in the day the market really rallied very hard on the back of better than expected cues from Hindustan Lever. Reliance also joined with announcement of their transaction with Viacom. And overall a sort of a relief day where it seemed like that very choppy trend that we have seen in the last 7 days. I mean, every day a gap, and of course overnight trend following systems have got chopped really badly. That seemed today that maybe we are about to come out of that, although in the last 45 odd minutes there was again a sharp fall. But overall FMCG, energy, consumption stocks, public sector enterprises did quite well today, along with Nifty at plus 1.21%. There was hardly any sector in the red. So overall, it does seem like market is coming out of this trough, but the 800-pound gorilla in the room is the NASDAQ, and we'll talk about this in a bit. So broader indices, as I mentioned, up between 1% and 1.5%. The only, sectors within the small case segment did not move much, 0.2%. Mid and small index also moved only 0.5%. So while the larger caps were moving hard, the mid and small caps did not really move much. Within the weekend investing, small cases, NNF 10 was up 1%, all cap was up 0.8%, EverGreen up 0.4%, and several of these strategies gained a bit, but those concentrated in small caps like MI25, MI35 lost ground, and MI50 also mid and small cap lost a bit of ground. MI20 was worst hit. One or two stocks in this particular strategy really got hit very bad today. So overall a mixed sort of performance, minus 1.9 to plus 1.07%. Within the top CNX 500 universe, you had Godrej Agrovet up 11%, JM Financial also up 11%, TTK Prestige up 10%, Shoppers Stop and Credit Access up 8 to 9%. So very good gains on certain mid-cap stocks. Network 18 and TV Broadcast 18 down dramatically, around 18 to 20% on this Viacom 18 transaction. Again, bringing home the point that a lot of times these transactions are already built into the price, and maybe more so. So TV 18 and Network 18 have been running very hard for the past many months, and today on the announcement there has been sell on news. Hopefully they should recover a bit in the next coming days, but it does bring home the point that most of the transactions that are happening out there or results that are coming through already get discounted in the price much ahead, and the theory of BBC Bhav Bhagwan Che actually works well in the market ahead of these events. Future consumer continues to drop 9%, Bombay Burma down 9%, Alok Industry, which was up yesterday, also down about 7%. One of the insights that I talked about today was on USD JPY. So the Japanese yen has been falling very, very dramatically. It was nearly around 112 or 113 yen to a dollar, and very quickly in the last 4 to 5 weeks, it has dropped to 130 today, and this 126 odd level has been very, very crucial. Last 2 decades it has not been able to cross that, but now the Japanese central bank has decided to not let the yields go up beyond 0.25%. So if they are going to control the yields, then they will have to sacrifice the currency to maintain those yields. And that is what is happening, is that yen is dramatically dropping to 130.6 now. And what this will have as a repercussion, I think, is that a lot of carry trade happens through the yen. So a lot of international investors, they borrow in yen and invest elsewhere. So now, while the cost of their borrowing in terms of the forex cost has gone up dramatically. So somebody who may have borrowed at 110 yen to a dollar and invested, let's say, in some venture somewhere in the world, and now to for that capital to go back, I mean, they've already lost 20% in terms of yen on that investment. So this may cause unwinding of several of these carry trades, and that itself may bring in pressure of some overseas investor sales in other markets as well as in India. So while this is just conjecture that I have, but I think this kind of forex moves does not lead to any short-term stability. It will definitely have some repercussions somewhere. Another sort of global insight here is about the NASDAQ itself. So this is NASDAQ 100 chart over the last couple of years, and you can see how NASDAQ 100 has gone from around 6,500 to almost 16,500, and now it is down to 13,000. So a very dramatic rise on the back of technology stocks in the US, and an equally dramatic fall that is happening now. There are several stocks that have dropped 60, 70, 80, 90%, and the current chart pattern is also that of a head and shoulders pattern, and now exactly at a very crucial support point of around 13,000. So it may take a few days or few weeks for this pattern to really play out, whether it will go through or it will just trip people down and then go up. We don't know, but this is something very crucial, I think, for all markets going forward, the US market being the mother market for all other markets. And we can also see this in the actual chart to give you more color. Just 1 second. Let me just try to exit this. Oops. Okay. So this is the NASDAQ long-term chart about going back 30 years. What we can see is that this was the dot-com boom. So we had a rally from 335 to 4,800. Some 15x type of gains happened in those 4-5 years, and then it dropped down to 757. So NASDAQ went up 15x and then dropped to about 2x from where it started. So a dramatic fall from 4,600 to about 700. So almost 80% fall happened in this period, and much below the 200 weekly moving average. And then it rallied from 757 to about 2,200. So about 3 times in the next 6-7 years, and then again from 2000 or it dropped 50%. So it has had episodes of very vicious drops in the past, and ever since 2009 it has not breached the 200 weekly moving average, and it has in fact come close to support to it in 2018 and then again at the COVID crash in 2020. So while this is extremely and even we can look at the log chart for it, and you can see how the log chart is kind of very similar to this move that we have now to what we had in the 90s, and there was a reasonably dramatic fall here after this, after dropping through the 200 week moving average. So at both times it has done that. So in case it does come through the 200-day moving average, which should give a very good support, I think somewhere about 20 odd percent lower. So that will be a very big, I think, accumulation point for the future. But for now, this current support of 13,000 should hopefully stay. You can also see here that on a daily chart, NASDAQ attempted to cross the 200 DMA 3 or 4 times, but it was not successful and it was beaten down. And this particular pivot now around 13,000 is a major pivot, which gives away, will bring it down to about 12,200 in the very first move down. So let's hope that this support stays and we don't get to see much lower levels on these stocks, because they will definitely have a cascading effect on the rest of the market. So this is all I had in today's episode for the Weekend Investing Daily Bytes. Thank you so much for watching these bytes and sharing it with your friends and family. Thank you so much. Bye.